All right, so good evening to all the attendees for having time here, spending your time with us on today's webinar sharing, riding the Chinese bull. Yeah, so today we have speaker Daniel Ang for the sharing. But before I will kickstart into the sessions, just let me have a quick introduction on our company, Philip Capital Sanjam Berhad. So before that, not sure that can you all see my slide, but if yes, can you drop me a 1 in the chat box so I can know that you already see my slides. Thank you. Okay, so let's move on to the introductions before we really kickstart for today's sessions. Okay, so before the session starts, so there's no any video recording for today's sessions, but if you are interested, we also will upload one video recording of today's sessions onto our YouTube channel, Philip Capital Sanjam Berhad. So after today's session, if you're interested to listen back the content today, you may just go to our YouTube channel and review the video again. Okay, so let me have a quick disclaimer here. This presentation has not been reviewed by Security Commission, and whatever sharing today is just a general information sharing and educational purpose only. So does not constitute any buying and selling recommendations. So if you're interested, just feel free to drop by our branches or consult your own remiser or dealer for more details buy and sell recommendations. Okay. So for Philip Capital Sanjam Berhad is a company incorporated on 7 October 1995. And in Malaysia, Philip Capital Sanjam Berhad is not only trading participant of Bursa Malaysia Derivative Berhad, but also participating organizations of Bursa Malaysia Securities Berhad and holder of Capital Market Service License. And you can see through the maps here, here's our Philip office nationwide. Actually, we are a Singapore company, but in Malaysia, our Malaysian headquarters is located in Kuala Lumpur, and we have total 11 Philip investor centers across East and West Malaysia. So if you're interested or you want to consult or explore our financial service, just feel free to drop by your nearest branch to consult with our company. Okay, so we are honored to become the first top choice broker in 2026, and we are the champion for best retail derivative trading participants. Actually, Philip Capital already so many years and is very well established in doing in futures brokeraging. And yes, in 2026, we are the champion in best retail derivative trading participant and second runner up for best overall derivative trading participants. Okay, with a very strong and well-established history. So we believe that we're able to cater and serve our futures client or even stocks client very well in their trading journey. All right. So actually, Philip Capital is not only in Singapore and Malaysia, but we also available in some overseas countries. For example, France, Turkey, Dubai, India, China, and others. So meaning that we're not only servicing local client only, but also having an international base. And through Philip Capital, most of you might be curious that what product and what service that available for me to trade with Philip Capital. So yes, not only we available for Bursa Malaysia local, so but also you're able to access for Singapore, Australia, Japan, Germany, UK, Hong Kong, and the most important one is US. So we believe that through offering so much of this product, and we believe that we're able to cater most of the needs of the investors. Okay, so here is why we can become your one-stop solutions for trading. Okay, so we not only have futures and stocks brokeraging, but we also actually have for contract for difference. Okay, so if you have interest or you are interested to explore your trading journey in futures, we actually have a comprehensive of the product coverage. For example, index futures, agricultural futures, meta futures, energy futures, and cryptocurrency futures. And if you are a stock investor and you want to, for example, you want to look for dividend stock investing or long-term investment goal, and you want to commit in the stock investment, we not only available for Malaysia shares, but also for other foreign exchange, for example, US, Hong Kong, Singapore, and Australia. And the next one, we have contract for difference. Actually, the trades for contract for difference, what we call is CFD, is actually the same or similar with stocks, but it's suitable for those investors or traders that you are looking for more leverage or more riskier return in your investment. Then you may go for CFD. And similar to stock trading, we also available for both local and foreign exchange for CFD. So we available for Bursa, US share CFD, Nasdaq, and also US index CFD. Okay, so why we can become your broker of choice? So as I mentioned just now, we have a very long, well-established record in Malaysia, and we are an award-winning multi-asset broker. So through Phillip Capital, you're not only able to invest in futures, but also stock and CFD. And another highlight is we available for 24-hour broking and execution support. So if you are the client that trading for foreign product in midnight, so don't worry that there's no any support that we will provide. So our night shifts is available for 24 hours. So actually you can just feel free to reach out for us for our service anytime throughout the days. Yes, and we also provide latest market news to our client to make sure that they are up to date with the market announcement and able to adjust with their trading investment portfolio. And we provide wide array of products, and also our platform is come with no platform fees. It's actually free to use our platform as long as you become our clients. Okay, so apart from that, we also available another share service through our clients. So if you're interested or you are just a newbie that just want to explore your trading journey, or just started to make your first investment, so you are feel free to explore our free one-to-one coaching service. Okay, so we have among these we have including introduction to futures, CFD, and stock trading. And if you have no idea that what the product that actually suits your need, for example, you are a risk-averse investor, you are a risky investor, you're looking for short-term or long-term growth. So we also have a coaching sessions to guide you that regarding on product knowledge. So how to choose the product that according to your interest, your preference, and investment goal. And the another one, we have platform coaching. So regarding to how to use our platform to execute your first buy or sell trades. Okay, so through our platform, you're actually able to access to futures, stocks, and CFD. So getting familiar with our platform is actually important to your investment journey. And another one is about charting system. Okay, so actually in investment, we have two types of investor. So for the first one, fundamental investor, and the another one, technical analysis investor. So if you are more interested with the technical analysis and you want to trade based on the candlestick chart, but still no have the idea how to read or analyze or decoding the technical candlestick chart, you also feel free to make appointment with us, and we can guide you on the charting system and how and teach you how to analyze and read the candlestick chart for your trading. All right. So other than that, we have weekly market calls. Okay, on every Monday 11 a.m. we available for market views and updates for our client. So our analysts will present on weekly views and updates, as well as talk about newly published report to make sure that our client able to up to date with the recent market news and announcement. And for live counter technical analysis, it's available on every Monday 8 p.m. So our technical analysts will discover the weekly trends and potential entries and exit level through technical analysis. So if you're holding certain stocks, holding certain counters, and you want to know what's the recent technical movement of your investment portfolio, you also feel free to dial in and chat with our technical analysts. Okay, so actually throughout the days or throughout the months, we organizing lots of the seminar and webinars. Okay, it's about physical event or online events. So you may scan the QR code on the screen here or take a screenshot and to check our schedule of the series event for upcoming dates. Okay, so usually for seminar and webinars, we not only cover index like today. Actually, we also cover many products like stocks, ETF, CFD. So we believe that through our seminar and webinar, our client able to get or gain more information here, and it actually is all free. Okay, so if you're interested, just take a screenshot So you can scan the QR code later to check and register yourself for our upcoming seminars and webinars. Okay, so the another one. I believe that most of the attendees today might be first time joining Affiliate Capital online webinars, and maybe you are the beginner that you just interested or just want to start your first investment journey. So before that, you must have an account to start your investment. And if you're interested, we also available online account opening. Okay, so everything is done online. You no need to drop by our branch to physically for account opening. So it's much more easier and convenient now. So if you're interested to explore our service, no matter in stocks, in futures, or in CFD, just scan the code so you're able to apply your own trading account online. Okay, so you may take a photo or scan the QR code on the screen here. All right, so before we really kickstart for today's sharing by Mr. Daniel Ang, let me have a quick highlight on our trading platforms offering to our clients. Okay, so actually for futures trading, we available for our in-house platform, which is Nova. Okay, actually Nova is a platform, is a quite user-friendly platform and offering over 90 technical indicators, and we believe that this is able to suit the most need of the investor, and that's a very user-friendly function with our platform. Buy and sell directly from charts, market depth trading tools, and you're able to access to both local and foreign products. And we also provide for live market news in this app. Okay, so if you are the first trial that you're interested to explore more about our features and function of Philip Nova, you can scan the QR code here for a demo account. Okay, so for demo account, the validity is 1 month. So within this 1 month, you're actually able to explore the function and get yourself familiar with our platform, with our trading platform, before you really kickstart your real money investment and trading. All right. So another features that we just recent updates for Philip Nova is live charts powered by TradingView. Okay. So I believe that most of you might be heard about TradingView if you are doing trading. And actually, our charting system is powered by TradingView. And the another highlight is if you are a member or subscriber for TradingView, you're also able to actually log in your Flip trading account in TradingView website. So if you already have your own setup, if you already have your own watch list in TradingView, so I think it will be more helpful for you if you're doing trading through Philip Nova at TradingView website. And the another one platform we have is Poems. Okay, actually Poems is also a user-friendly platform, but the difference with Philip Nova is Poems is for stock trading platforms. Okay, so in this platform we offering all-in-one watch list, charting indicators, and exchange top 30 movers, powerful stock analytics. Okay, so we believe that for those investors or especially fundamental investors that may monitor the fundamental news or the financial quality report of those listed company, all the information are available in this app. So actually it's a one-stop app for you to not only investing, but also for you to explore or survey for the company announcement and recent market news. All right, so the next one we have a promotion campaign for invest US and ETF from only 0.02% or minimum USD 3.99. Okay, so actually this is the promotion that we currently running. So if you are interested in invest your money in US market, for example, those mega tech stock, Meta, Tesla, Nvidia. So actually this might be a very helpful promotion campaign for you. In this campaign, we're offering free US live market data, no platform and custody fees, and we also having weekly market calls So if you have no any idea what stock to eye on to or to be monitor, so you can just stay tuned for a weekly market call and start your investment in USS. Okay, the fees is relatively cheap. It's from minimum 3.99 USD or 0.02% only. Okay, so the next promotion we have currently running is drive your BMD trades further with Philip. Okay, so if you are a very new and beginner traders in futures, BMD actually referring to the Bursa Malaysia derivative. Okay, so the current promotion campaign that we're running is for new clients that you want to open an account and start trading with us. So in this promotion campaign, open one futures account and execute one trade on Bursa Malaysia derivative product. So you can entitle for 50 ringgit of trading credit. So the money will be credited to your trading account and can use it for your trading. And for those existing clients that you already trading in BMD products, we also having lucky draw for the client trading Bursa Malaysia derivative product, including Prodo MyV, 10,000 of the trading credit, iPhone, Samsung TV, iPads, and more. So currently the promotion campaign already running since 1st of November, October 2025 and until 31st March of 2026. So if you're interested, just scan the QR code on the slides to check for more info and details. Okay, so the lucky draw will take place after March, so will be in April. So if you're interested, just feel free to join in this campaign and entitled for a chance or opportunity to take part in our live lucky draw. All right, so the next one we have SGX Asian Index Futures. Okay, so in this promotion campaign, you're able to trade SGX Asian Index Futures from as low as 1.88 USD. So okay, so it's a very cheap commission rate if trading futures, and the promotion now is ongoing until 30th of June 2026. So if you are already a client that trading in Singapore index, China index, or Taiwan index, you may check for more info through this QR code. And actually, it's an automatic entitled for all the clients trading in SGX Asian Index Futures. All right, so the next one we have, the promotion is for mini KLSCI. For those investors or traders that already trades for a long time in Malaysia market, I believe that you must be know about KLSCI futures. And recently, in late January 2026, Bursa Malaysia had just launched another mini size of the KLSCI futures, which is FKLM. Okay, actually, it's another micro size of these KLSCI futures. And now we're also having a special promotions for this product. Okay, so trade mini FKI at just 2.99 ringgit commission per lot only. Okay, it's a very cheap commission rate for this newly launched product. And we also having another challenge campaign, which is ranked among the top 15 traders and you're able to win the cash prizes up to 8,888. So this is a 6-month promotion campaign running since late January and will be available until 31st July of 2026. Okay, so here's the QR code on the slides. If you're interested to check or the traders in KSF futures, you may check for more info and details through these QR codes. All right. So that's all about the introduction for Philip Capital and our promotion campaign. So before I really invite Daniel Ang, so here's you may refer for his speaker profile. Mr. Daniel Ang started his career trading commodity futures back in 1985, and he went on to be a good gold dealer in 1989 before joining Standard Chartered in 1992, when he traded mostly US futures as well as Forex and became one of their vice president. So he is currently contracted to CME Group as an independent speaker for the Asian Pacific regions, as well as for the Frankfurt-based Eurex. So he also the author of the Essential Traders, a book available at major bookstore in both Singapore and Malaysia. Yeah, without further ado, let's invite today's speaker, Mr. Danny Ang, for his sharing sessions.
Thank you very much, Jay-Z, for the introduction. And let me share with you my screen first, just in case. And let me see where's my screen right now. Let me know if you can see my screen, because if you're not, then I will be having issues. Let me see. Can you see my screen right now? If you can you just drop yes so that I know that you can see? All right, without much ado, let's get started. Today's topic will be on principally on the Chinese equity market, something that we have not done very frequently. However, this is one of the first few events I'm doing for SGX. Now, SGX is not new to me. Actually, I was a registered representative for the predecessor of SGX called CIMEX. Basically, it's called Singapore International Monetary Exchange. Of course, the name has changed now. SGX has two divisions. One's for equity trading, the other one is for derivatives. So this event that we have this evening is sponsored by SGX Derivative, and we'll be talking exclusively on the Chinese equity index. The very popular ones traded out of XGX is actually the A50 and the H50. Now, you may not know both what they are all about. So this session will actually give you an introduction as to what these two products is all about. Now, I knew you have already have a disclaimer, but I still need to share with you my disclaimer. This presentation is for information purposes, especially for new products that you may or may not have heard from SGX. So it's not an investment advice. So we do not present this as an offer for you to buy or sell any kind of financial instruments. And definitely this presentation do contain my forward-looking statements, including my opinion, forecast, expectation, and conclusion based on current views. Now, these opinions are subject to known and unknown risk and uncertainty, which could actually change over time. And because this presentation is general in nature, it does not constitute a professional advisory relationship between you and me. So attendees, you should still go look for a qualified financial advisor before making any kind of financial decision. Now, with that out of the way, now we all know China, but how much do we know about Chinese equity markets? Now, on the surface, we know China is a big economy. A lot of people know that China is the second largest economy behind the United States. But how big is big? Okay, so here we'll be talking very briefly. Now, we all knew that we are only in the second week of February 2026, and we just finished the whole entire year of 2025. Now, for the whole year, China GDP as a whole is at 5%. Now, 5% is actually very respectable for such a large economy. Now, although we knew that in the fourth quarter of last year, the GDP for Q4 actually dipped a little bit from Q3. Q3 was 4.8%. However, Q4 was 4.5%. But on an annualized basis, China economic growth registered 5% growth, which is very, very good. And we also knew that despite the trade tension between the United States and China has been exporting less to the United States, which used to be its biggest export market. Now, China has reported a fantastic trade surplus of $1.2 trillion, even though they trade lesser with the United States. So this is actually proving to us that China is already very well prepared for Trump 2.0, because we all knew Trump 1.0 was all about tariff, okay, and sanctions. So when he came back to the White House as the 47th US president, China was already fully prepared, okay, to diversify, and they have pivoted away from the United States and still be able to report such a sterling report card, okay. And export still accounts for a big chunk of the Chinese GDP, accounting for 1/3, whereas internal consumption only attributes about slightly over half of their GDP. So there is a lot of room to grow if China wants to actually grow their domestic economy for self-consumption. Okay, here we have somebody you probably have heard of. You probably have heard of Ray Dalio. He is the founder and chief investment officer for a very large hedge fund called Bridgewater Associates. A month ago, during an interview with Bloomberg, he actually reaffirmed his overall bullish outlook on the Chinese economy. And this is no small fund. The amount of fund under management by this company is about $1 trillion. So he is a big player. Okay, so if you can see that he is still bullish on the Chinese economy, despite all the tension that we have seen throughout 2025 and the first few weeks of 2026, he is still very, very positive. And so this is where we should begin our analysis of the Chinese market. Now, earlier on, I did mention China is very big, but how big is big? Okay, according to many reports, based on GDP, which is the gross domestic product, China's economy is currently about $19.4 trillion. Okay, this is very, very big. And if you look at the chart on the left, China joined the WTO at the beginning of 2000, at the end of 2001. Okay, and it has practically doubled its economy every 8 years. You can see the trajectory of the chart has been going higher and higher. So despite all the trade tension that we have in 2025, we have tariff war, China economy continue to grow. Okay, in fact, it registered all-time high. Now on the graph on the right, you can see on a per capita basis, as far as every Chinese is concerned, if you divide by the entire 1.4 billion people in China, the per capita basis, China is about $13,800 as of the end of 2025. You can see the trajectory mirrors its growth in its GDP. However, the GDP is not the only metrics you want to measure as how big an economy is. Now, if you measure by what we call the purchasing power parity, what we call PPP, according to two different standards, here we have the World Economics Forecast saying that China is a lot bigger than the United States in terms of purchasing power parity. According to their report, China's economy is at $43.8 trillion. Now, this compares very, very favorably to the regular GDP metrics of $19.3 trillion. You can say that 43.8 is a lot bigger than 19.3 based on GDP. Now we can see second place, the US based on this metric is $27.5 trillion. Now, if you don't believe the world economics data, you look at the International Monetary Fund, the IMF data set. At the end of 2025, China's economy based on PPP is $41 trillion. It is significantly larger than the United States at $30.6 trillion. So when you say US is the largest economy, you are not wrong. And if you also say that China is the largest economy, you are also not wrong because the metrics are very different depending on what metrics you use. Both answers are correct. Okay, so if you believe China is the largest economy, obviously we want to know what China equity market is all about and how we as investors can actually participate in the growth of China. If you have not already participated in the growth of China, it's about time we take a look at how we can actually advantage of the fantastic growth that we are seeing in China. Okay, so in China, there are many equity index. You probably would have heard about the Shanghai Composite Index. That is one of the major index. Now, you also probably have heard about the CSI 300 index. Then, of course, we have the Shenzhen Stock Exchange Component Index. We have the CISNEX index. We also have the FTSE China A50 index. And this is exactly the index that we're going to be talking about. Okay, so SGX happened to offer a derivative of the FTSE China A50 index, which is very, very popular and very, very liquid. Okay, so this is a brief history of the capital markets, so to say, of China. It started not too long ago, less than 20 years ago. We can see Shenzhen and Shanghai launch its exchange for the China A50 in 2003. So that is what, 22 years ago. So it's not that long a history. Then, of course, over time, we also see other exchanges also wanting a share of this fantastic Chinese market. SGX launched FTSE China A50 index futures in 2006, and that followed by Connect Week, because you know that foreigners cannot participate directly in Chinese equity markets. You can do so through a stock connect through Hong Kong. Okay, so this will also lead us to the H50 index later on. Here we can see that the weightage of the index itself has gone through certain recomposition. Okay, and then SGX launched the version of the H50 index. This is very much due to the very unique a very unique pathway into Chinese equity markets through Hong Kong. So Hong Kong Future Exchange also launched their MSCI China A50 Connect Index Futures. They are similar but not the same composition. Then, of course, we can see as of 2 years ago, we have uh, a massive rebalancing of the component index. One of the biggest one is actually the Guizhou Maotai. You probably have heard about Maotai Jiu, okay? And this is a very, very big company. It's as of 2023, it actually gained almost 16% of the total weightage of this index, which is the A50. Okay, so this is a brief history of where we have seen the A50 gone through from 2003 to currently. Okay, and this is the thing about the A50 here. The A50 is listed in both Shanghai and Shenzhen exchanges, and it is a benchmark used by a lot of foreign money managers. So a lot of money managers will benchmark their performance as far as the Chinese equity market is concerned using the A50. And here we can see that the A shares refers to similar to the composition of the Dow Jones, which is the bluest of blue chips traded in the United States. Here we have the reddest of red, we call the red chip, okay, and they call it the A chip. And we can see these are the 50 largest Chinese company listed. Okay, we have very familiar name like Baidu, we have Tencent, we have Alibaba, and of course we have Guizhou Maotai. Okay, and foreign funds who wants to have exposure to this major index. Okay, and here we can see the latest composition of the 50 index, 50 companies that make up this index. Of course, this composition is not cast in stone. On a regular basis, the exchange reserve the right to rebalance the composition. And here we can see the pie chart over here. Now, this chart, this index here is to me not very well diversified in the sense that it is concentrated predominantly by the banks and life insurance companies, taking up more than 50% of the entire composition of the index. So if you are trading the A50, just know that it is heavily skewed towards the banks as well as the life insurance companies. Okay. Here we have the driver, what actually moved Chinese market last year. There were six major sectors that, I would say six major drivers that drive the Chinese equity market in 2025. Of course, we had the stimulus package. China was getting ready for Trump 2.0. So they actually wants to defend and protect their equity markets. So the Chinese government has been launching very friendly stimulus policy in the sense they want to maintain the vibrancy of the local equity markets. And of course, last year we are very familiar about the theme about AI. Everything about AI seems to be running very, very well for the whole of 2025. You can see back in on Wall Street, we can see everything, every company that has anything to do with AI has seen a very superior performance last year. Okay, and in China it's the same thing. And China, we knew last year we have this company that came out of nowhere and stole the thunder from the Wall Street companies. We have DeepSeek that actually, for a brief moment, actually overshadowed the OpenAI whatever they are doing for 2025. So you can see AI is a major, major component here, and it is still a factor going into 2026. And of course, EV, we know about EVs and renewable energy. China is big in both the EVs and renewable energies. We know China is the leader in solar energy, in wind turbines, and as well as we know about EVs, electric vehicles. China now is the dominant player in the EV space here, and this will continue to be a factor. And of course, China also knew that they cannot be only be exporting. China is trying to do what we call a dual circulation, meaning to say that while they are still going to focus on exports, they are also looking to encourage domestic consumption. So domestic consumer sector will also be doing very, very well going into 2026. And of course, we have large inflow of capital moving into China last year as a result of the performance of the Chinese equity markets. There was a long period of time where people are not looking into China equity market, but last year was a sea change. We see a lot of foreign capital flowing into China itself through Hong Kong. Okay, and despite the fact that they have a trade tension with United States and the West, the export is still doing very, very well. Like I said earlier on, their overall trade surplus for 2025 was $1.2 trillion, which is a record. considering they are exporting less to their biggest economy, which is the United States. So whether or not 2026 will be following the same script, I think this year will be different. Now, this year, China launched their 15 5-year plans. Now, China's central governments always think in terms of 5 years. Every 5 years, they will have an plan and how to get to that uh, conclusion of the plan. They call it a 5-year plan. Now, the current 5-year plan is for this year, 2026, all the way to 2030. So over the next 5 years, these are the 6 sectors that will do very well, because this is where the Chinese government is going to drive the economy. First, we have technology. Now, China knew they have to be self-reliant. We knew that there's a lot of sanction, whether it is in EUV technologies or in other high-end technologies. You know that China needs to be self-reliant. They need to have a domestic equivalent of the same technology being used by the West, so that they will not be sanctioned. So China definitely wants to double down on being independent as far as technology is concerned. So we can see semiconductors, biotechnologies, and AI. These are the areas in which they will be throwing a lot of resources into. And then, of course, we have their wanting to actually leverage on their cutting edge technology. Now, China is no longer just a simple factory to the world. China, it has moved on and graduated from low cost manufacturing to high tech manufacturing. And in certain high tech area, China is leading the pack. So they want to maintain that by driving the economy forwards. They also knew that the strategies needs to change a little bit. They need to also drive domestic consumption. So this is also to elevate the hardship that the factories are facing as a result of the trade war. We knew that there's a lot of manufacturing, especially the low-end manufacturing, has been very badly hit by the trade wars between the US and China. Okay, so there is a lot of people now have lost a lot of jobs. A lot of factories and manufacturing base has been negatively impacted by the trade war, and China needs to re-gear the economy for a consumption-based economy. So this will be a major highlight. Now, of course, we have the other thing about upgrading the industrial base. That will be something that you will also need to be centered upon. And green energy is talking about the renewable energy. Okay, we have wind and solar. China is already the leader, and they want to double down in this space. Especially we have Europe. Europe has talked about going into renewable energy, climate change, and all stuff, but their economy is not geared to build products for that. Okay, and China has been the one leading the pack. Okay, here we have also talking about how to rebalance their economy for self-sufficiency, as well as develop new models for not only national security. They need to stabilize their supply chain, and China has weaponized their supply chain. We knew that China has actually restricted the export of rare earth minerals, and lately we also saw China also has restricted the export of silver. So all these are basically trying to secure the supply line, okay? And the world have woken up to a China that actually know how to stand up to the sanctions and economic warfare conducted by the West, okay? So this will be the few areas we need to be concentrating on. So basically what happens in 2025 will still be relevant in 2026, and plus the 6 drivers that I just mentioned for the 5-year plans ending 2030. Okay, so we will want to talk about, okay, of all these things that we just covered, where are the trading opportunities? Are there anything that we can do to take advantage of everything that Chinese want to do for the next 5 years? Okay, here we have a chart here that show you the correlation of these two index that I'll be covering this evening. Principally will be the A50 and the H50. And what are the difference? You can see that the two index, although they are slightly different, they do move in the same direction. The correlation is almost perfect. Okay, you can see every dip, every bounce, mimic each other. So we can see that the orange line refers to the A50, which is the major index, and the H50, which is an index that we had to trade through the SGX itself. So we can see over the years, both index has been mimicking each other's move. The correlation is almost 1:1. Okay, so without much ado, if you have to pick one product between the A50 and the H50, which one will be your choice? Okay, so I think the choice is very much an individualistic definition. Okay, you pick the one that best suit your investment outlook. Here we have the contract specification. Okay, and the contract size is $1 times by the index itself. Okay, and the symbol used in SGX for this A50 index futures is CN. And the contract month available again will be the odd months. We have the March, June, September, December, plus the two nearest zero month. Of course, right now the most active traded month is the March contract. You can see that there's a calendar here. Okay, and this calendar here refers to the March contract, which I highlighted the number 30. 30th of March 2026 is the last trading day for this index. Now, remember, this is a Chinese index. So when we talk about business days, it must reference the Chinese calendar. If that day happens to be a Chinese holiday, then obviously it will not end here. Okay, so you got to check your Chinese calendar, make sure you are fully aware of the public holidays in China. Okay, for the March contract, there is no difference. It will end on the 30th, the second business day for the month of March. Okay, so the trading limit is up and down 1%, 10% relative to the previous day trading session. And if the market hit the circuit breaker, the next circuit breaker will be at 50% prior of the previous day settlement price. Okay, then here we know that the settlement is cash settlement like any other equity index futures. You are not required to actually deliver this underlying share. You just settle in cash. And the margin requirements, I'm here talking about maintenance margin. Maintenance margin is usually about 90% of the initial margin. Means, if you want to know what's the initial margin, just add 10% to the maintenance margin. That will be traditionally what you need to hold a position overnight. Okay. Of course, this number here is not cast in stone. The exchange reserve the flexibility to either reduce or increase the margin requirement based on volatility. For now, it is 900 US dollars. You want to check with Philip as to the day-to-day changes in the maintenance margin. So with that out of the way, I want to highlight a few milestones. Now, as far as December 2025 is concerned, we see a 7% increase in the volume traded. For the month of December, there were more than 9 million contracts traded. So that is telling us this contract is very, very liquid. Okay. Then for the whole of 2025, there were 112 million contracts. Now, assuming there are 261 trading days instead of 365 calendar days, that works out to about 429,000 lots traded per day. And that is huge. They're also telling us that this is a very tradable contract. Whether you are going to be doing scalping for the day or you're going to hold position, definitely it will be a very suitable product because of the very deep liquidity available for this SGX A50 futures contract. And as far as open interest is concerned, open interest refers to contracts that has not been closed out. We can see that there's a lot of positions that are held overnight, and that has increased by 16% to $17 billion nominal value. Okay, so you can see that these are great milestone for a product. Here we have the overall look of the A50 on the higher time frame. Here we can see I'm showing you the weekly time frame going all the way back to 2006, and we see that the market actually registered a high just before the global financial crisis at 23,600, and then as a result of that subprime crisis, this market also suffers a very deep decline like the rest of the world. And it went down to as much as 5,734. And since then, the market has been trying to recover. The best recovery effort was at 20,600, and that was in 2021 after the pandemic. But since then, the market is at about 15,000 last I checked. Okay, so based on this time frame, the market can go two ways. Either it go higher towards my target of 25,751, or it go lower to test the 2,744. So, like I said, it can go either way. However, when I take a closer look at the structure of this weekly time frame, it does also show me another statistic, meaning to say the lows are getting higher. So when you see lows getting higher, it's usually a case for a bullish bias. So on that weekly time frame, the bullish bias to me is favoring the upside. And this is also one of the reasons why I picked this title, Riding the Chinese Bull. Okay, there is a slightly bullish outlook to this. However, we also see that we have lower lows. 23,600 compared to the 2021 high of 20,600. So the lows are getting lower. So what it also tells us, on another sense, if you are a technical trader, you will notice immediately that there is this thing called the market compressing. Okay, the market has been consolidating since 2006 and is moving towards an apex. So this triangle pattern, okay, or this compression here suggests that the market will continue to compress. When you compress a spring, at some point when you release the spring, the energy of that release is going to cause the market to violently go in one direction. And which direction will it go? Again, we will have to look at the structure of this compression here. Here we are looking at this possible triangle. Now, if this is actually a triangle, it'll be very easy to trade. If you understand what triangle is all about, triangle has 5 legs. Okay, you have the A from the 23,600 all the way to 5,007. That's of A. Now remember this entire length here. This length here will be very important because it will tell us where is the target if the market do break out one way or the other. Okay, so because it's a 5 ways, we have a 5 leg in within a triangle. So where we are right now is still within ways C and D. What we're going to see is A, B, C, D, E. And the whole idea of a triangle is to position for the possible E. Because if E is in place, the next move is going to be so explosive. Okay, I love triangle because triangle is violent, it is fast, and instead of waiting for market to break the high, which will be too late for a lot of people, I like to anticipate the E leg. Okay, and you don't see that in the higher time frame, you see that in the lower time frame. So you still need to monitor the lower time frame, like maybe the daily time frame, the 4 hours and the 1 hour, to look for confirmation of a low. We are still very early because we are still in the process of moving from C to D. It will take a few months, if not a couple of years, before the E leg is going to be in place. So there's going to be a lot of trading opportunity. Assuming this is a triangle, this is what I think. This entire length here for 23,600 to 5,734 represents about 17,800 over points. So this is a lot of room for the market to move. Assuming this is the entire move, at the point of breakout after the end of a 5-year structure, the market will violently break out in one direction or the other, and the potential is 17,800 points. So you must get ready for this possibility. It may not happen immediately, but based on what we can see so far, unless the structure changes dramatically, I think this will be still my preferred outlook, okay, for this index here. Here we want to wait for a breakout. Once E is in place, the market will actually attempt to trade to take out the high of D. Once D high is taken out, in which it will trigger a lot of buy stop because traditionally people will buy on the breakout. Okay, so if it's going to buy where E is going to be ending, that will be at a major advantage compared to the guy who buys on breakout. Okay, so assuming the market breaks out at some point in time and take out the high of D, the entire structure from the point of breakout is targeting something like 35,230. This will be my long-term target, and this will represent 17,800 points. So I know the potential for this move is to the upside, and I will definitely want to participate as the market eventually unfolds in this 5 wave, which I can see from a higher time frame. Now, for those who are going to be trading the lower time frame, what can you do? Okay, on the lower time frame, this refers to the daily time frame. You can see that the market is having a bullish bias. Don't ask me how I know, because this is my way of looking at markets. I have a way to actually see the parameter in which price action will define the trading range. Here I have this green color box, meaning to say that for the time being, for the daily time frame, I can see the market's trading between 11,000 to 16,360. Okay, and it's on the higher end of this triangle, of this parameter here. Here, initially, I will see that if the market do have a 3-wave bounce. Now, 3 waves are always corrective, but I would have to give myself a more conservative target here. If this is a large 3-wave move, it will target at a bare minimum 17,100. AB equal to CD, okay? AB equal to CD. will give me 17,100. So that is a possible target here. And then when I look into the internal structure on the daily time frame, I do see an internal smaller degree three-wave pullback. Now, three-wave are usually corrective in nature. It is a corrective of the dominant trend. So the dominant trend to me is up, and this three-wave structure here suggests that the bracket between 14,479 to 14,760 is an area of opportunity. If I'm going to be taking a position, this will be a good area for me to look for possible reversal signal. And I do have a low here at 14,559 last week. Okay, and the market has bounced off this low. So if this work out to where I think it is, and my target is at 17,100 or at least 17,092, then I know I have a trading opportunity. I'm not recommending this trade to you. I'm just saying that there is an trading opportunity over here. Okay. If I believe the market is going to go higher to test the 17,092, therefore I want to be looking for buying position. If you have not already bought, then the next time it dip back into this bracket of prices is where the opportunity lies. Okay, and that gave me this trade setup here. I know I need to buy from where? Buy at the upper end of this bracket at 14,716. I can put a limit order to buy. If I have not already bought, and then I can just wait for the market to come back and revisit this bracket again. If it comes back, if it doesn't come back, too bad for me. Okay, and then I know that the market has a pivot line. You can see this red horizontal line. It touches here 1, 2, 3, 4. Okay, so I know this is a major pivot line at 14,366, and this is basis the March contract. Okay, so I know I need to put myself below this level. I cannot put it exactly below here. So I'm giving myself a little bit of breathing space at 1400, 14,300. Assuming you can take the risk. The risk here is for every one lot, there is a risk of $416. However, because my target is at the lower end of this bracket here, the AB equals CD at 17,092, then I'm gunning for 17,092 as my target. And if I'm right, this trade work out for a possible gain of 2,376. Now, this compare very, very favorably, which give me a risk-reward ratio of 1:5.7. Meaning to say, for every $1, I'm prepared to risk. Worst case, I lose $1, but if I'm right, I have the potential to make $5.70. Okay, so the capital outlay for now, maintenance is $900. So this will be the opportunity. Okay, as far as this index is concerned. Now we want to look at the other index, which is the H50. The H50 is, of course, traded out of Hong Kong, and we use because of the Hong Kong Connect. So we can see that here it combines mainland shares with the red chips and the P chips with the private chips here. So we can see it's traded out of Hong Kong, and you can see this is also a benchmark used very much in the same manner that the A50 is being used. Here we have within the 50 stock components here, we have the largest of the Chinese company listed on A50. Here we also have familiar names like Xiaomi, Meituan, and China Construction. These are household names, okay? And one difference here is that this contract, if you take a position in Singapore, the SGX, you can actually offset it with a similar product traded out of CME. Meaning that you can buy or have a long position on SGX, and you can close out the same position in CME, what we call the mutual offset. Now, this is a legacy, very unique feature from the day when SGX was offering the euro dollars futures. Okay, we call it the mutual offset system, and they maintain that very unique feature for mutual offset. It is not available to other exchanges. Only the SGX and CME have this very unique, whereby you can open a position in CME and close it out in SGX. So this is fungible. Okay, meaning to say you can trade it as one extended trading hours. Okay, and this is one of the major feature of this product here. Here we can see these are the 50 current composition of the component stock of this H50 here. Of course, again, this is not cast in stone. You will see that there are some overlaps. Certain companies that are listed on the A50s are also listed on the H50. Here you can see the composition of the weightage is more diversified. Whereas you check the A50, they are only broke down into 6 major sectors, with the banks and insurance companies taking a big chunk of their weightage. Here you can see that it is more evenly spread out. Although the banks and the insurance are still a major component here. We have the banks taking up 21%, and we have technology, we have insurance, and then of course we have other other sector also taking a big chunk of the pie. But still, it is a lot more diversified than the A50. If you think this is important to you, that would be something that to take into consideration. Okay. Now the milestone. This index is, in terms of trading volume, is not as great as the A50. However, for the whole of 2025, there are 1.7 million contracts traded. On an average day, assuming we have 261 trading days, it works out to something like just under 5,000 contract per day on the average. So it is still very liquid, okay, although not as liquid as the 429,000 contract traded for the A50. So in terms of liquidity, definitely it cannot be placed in the same level as the A50, but it's still very, very tradable. Okay, this is the contract specs. Okay, here we have slight difference here. For every point move in the index, you times by $2. Remember, the A50 is times by $1. The symbol here is FCH. Okay, and 2.5 points equal to $5. Again, the available contract amount is exactly the same as what you see in the A50. Now here we have two different things. We have the T session. T session refers to the regular trading hours on SGX. The market opened at 9 o'clock and closed at 4:30 in the afternoon Singapore time. Okay. Here we have pre-opening, and then you can place your orders. And once it hit 8:58, you cannot change your order anymore. Okay. Wait for the market to open. And then of course we also have pre-closing and all stuff. Then what happened is after the market closed at 4:30 p.m. in the afternoon, this market doesn't end. It reopens 15 minutes later on a T+1. You'll notice that it will overlap into the New York trading hours at 5:15 morning Singapore time. So it's as good as almost 24 hours coverage. So you can actually hold your position and continue to trade this product here. This is very unique. Okay, here we have the last trading day, very similar. Now this one is based in Hong Kong. Okay, unlike sometimes you see certain holidays that are celebrated in Hong Kong may or may not be celebrated in mainland China. But if they are the same, then of course you want to reference the Hong Kong public holidays. Here for this March contract, the most active front month contract, it is the same. March 30th is the second last business day in Hong Kong. Okay, and the daily limits is the same as the A50 relative to the previous day closing price or the settlement price, went down 10%, and then if the market hit the limit, it will have a 5 minutes pause, a cooling off period before the limit moves to 15%. Okay, so exactly the same as the A50 here. Now settlement is the same. You settle in cash. If you have not liquidated your position on the last trading day and your position is still open, it will be simply settled in cash. If it's a positive position, you will be credited with the gain. And if a position is losing money, they will just simply minus the losses from your trading account. Here, you can see that the maintenance margin is higher. Okay, currently it's 1,730. Again, this is not cast in stone. This is the maintenance. So in terms of affordability, okay, it's only natural that people will gravitate towards the A50 because of the lower margin capital outlay required. So maybe you don't think this is an issue and you think that you like the feature of the H50, then you obviously can trade this as a individual products. Okay, very similar. So here, this is the longer term outlook, very similar to the A50. We can see the buyers here is to the upside. Okay, you can see the markets are gradually going higher. And the most recent trading here, we have a double top here. The most recent high is last October, okay, at 19,000, and then most recent challenge is 18,865. Here we can see that there is a counter trend in place, and this is on the higher time frame. This is a AB equal to CD. AB equal to CD, minimum target is 20,192. However, internally, there's a smaller ABC here. This one has not dipped into this bracket, unlike the A50. Okay, so there is a possibility H50 will eventually, over time, over the next few days or next few weeks, gradually decline all the way into this bracket. If it does, the bracket between 16,442 to 16,905 represent an area of opportunity. If the market should dip into this bracket, look for a reversal pattern in a lower time frame, maybe 1 hour or maybe even lower. And then once you are happy that a reversal pattern has occurred within this bracket of prices in a lower time frame, you may or may not want to take a position here, aiming for a continuation of this bullish bias towards 20,192. So if that is the game plan, okay, this will be the trade setup. Okay, here obviously we have wanting to buy at the upper end of this bracket here at 16,905. So this will be a limit buy order. And my stop, you can see that there are two horizontal lines. Okay, with the lower one at 15,080. Never put your stop exactly one tick below. You just want to give that stop a little bit of breathing space. But that will have the disadvantage of having to put the stop a little bit further. Here, the stop is at 15,000. Now, if you do not like the idea of a round number, you can put it at 14,990, for example. That will mean that your risk profile will actually increase. Here, if the trade doesn't work out, if you buy at 16,905, the market did not stabilize, did not go up, it comes back down and take you out at 15,000, you were looking at the potential loss of $3,810. However, if the trade works out, the market actually bounced off this bracket here between 16,442 to 16,905, and you are gunning for the bare minimum, which is the lower end of this bracket here at 20,192, the target here. You are looking at a gain of 6,574. On the risk reward ratio, this is not as great as the one that I just shown you for the A50. Here, the risk reward here is 1:1.7. Okay, and if you don't like the idea of having to risk $1 for a gain of $1.70, you can simply walk away. There is no need for you to take a position every time you see a trading opportunity. You want to look into the risk reward ratio and see if it fulfill your bare minimum criteria. For me, this is a bare risk reward ratio, and even if the market comes into this bracket, I may not want to do this trade. So on a relative basis, the A50 trade setup looks more superior because that one has a risk reward of 1:5.7. Okay, so it is at least 4 times bigger, okay, compared to the H50 trade setup here. And the margin requirement is a little bit higher compared to the A50. So on a relative basis, just know that based on this trade setup, A50 seems to be a better consideration. Okay, now if you want to know more about what's happening in China, definitely you want to read about analysis from a third party as to what's really happening in China, because we are more exposed to the English media. We need to say that our idea of China only comes from the English media. If you are bilingual and able to read in Mandarin or Chinese, you are definitely in a major advantage here. I can't, okay? So I can only read English media, and these are the usual source of information for me. Right? You can actually register a free account with Think China, okay, or you can also register account with China Briefing, or you can check for information on investing.com, okay, as far as the economic calendar is concerned. So there are more. I'm just trying to highlight the 8 places where I can get information on China. Okay, so we have come to the point whereby I will take questions. So if you have any question for me, you can pose your question now. Okay, please send me your question if you have any. And JZ, if you can be the moderator, maybe you can curate the question for me.
Yes, sure. Okay, so I see one question here raised by Steve. So what is your take on H shares market as compared to A shares of onshore markets? So which will potentially have more upside, and most big cap technology stock are not listed in A shares market but in H share market?
Okay, your depends is a very personal preference. When I look at a product, I want to look at the tradability of the product. In terms of liquidity, I would definitely be paying more attention on the A50 products here because of the volume traded. Okay, one of the reason how I select a product, if they are quite similar, okay, in structure, I want to see if the liquidity is deep. One of the things we want to look at in the product is very deep liquidity. Deep liquidity means there are very competitive bid and offer. Meaning to say it makes the cost and the risk of trading that product a lot lower. Because of the highly competitive nature of the liquidity for the product, it means that the bid offer spread is actually very close. Meaning to say that I don't have to give away a lot of advantage to either enter a buy or sell position. Likewise, if I get stopped out because of the trade spread, I won't be stopped out with a lot of slippage. So that will be one consideration. Now, if you are happy with trading the other big caps that are not captured by the A50, then obviously you have different consideration. But for me, the liquidity level of a product is very, very important. The cost of trading is beyond the margin requirement, is beyond the commission. I have to also consider the spread. Okay, spread is that killer. If the product is not as liquidly traded, that means to say the bid offer spreads are a little bit wide. That actually increased my risk per trade. Okay, cost of trading, let's say for example for Philip Capital, they charge let's say $1.22, okay, per lot. So that cost is fixed, but the bid and offer spread is not. And at times of high volatility, it is the difference between making money and actually losing money. So I will pivot towards the A50 in that selection process. But it can work very differently for you because you have maybe different criteria of selecting which product to trade.
All right. So thanks, Daniel. And yes, liquidity is very important. I believe that this answering very well to your question, Steve. So another question here. Do you think A50 is suitable for day trading? And A50 is very volatile and it seems manipulated. Any opinion?
There is a lot of perception that Chinese equity markets are highly manipulated. I do not know whether that is to be the case or not. But however, we all know that there are a lot of state-owned companies that are also listed to be openly traded. And obviously, in terms of information, it is not unnatural for this company to have some inside track. I'm not saying that they do, but I'm saying that because state-owned company are a major feature in China, obviously they will have to uh, uh, they will have to launch their manufacturing and their investments based on the major central government policy. So obviously, directive will be passed down, and they'll be the first one to receive the directive, and they will invest accordingly. So in that sense, yes, they do have uh, information not necessarily available to the general public. In that sense, yes. Okay. But other than that, it's no different from, let's say, big company in on Wall Street having some kind of insider information before the rest of the world does. Okay. So I won't consider that to be a major disadvantage. If you're not trading too close to the marketplace, okay, meaning say if you're not trading the ultra lower time frame, then I think you can basically avoid it. I learned long time ago not to trade too close to the marketplace, okay, because trading is already quite difficult, okay, to get your directional bias correct and your entry level correct. And if you are trading the ultra low time frame, it actually increase my risk. This is from a personal perspective. I have actually been burned quite badly trading the ultra lower time frame. But my result has improved over the years since I step back a little bit from the marketplace and don't trade the 1 minute time frame. Okay, and that actually saved my skin. Okay, so maybe it's something that retail investors need to be aware of. Trading ultra short term, okay, can be very exciting. I give you that, it's very exciting. It keeps your adrenaline pumping. However, at the end of the day, we are all traders and we only have one motive, which is to make money. And if I can trade from afar and still be relatively safe, then actually if it hit my objective, then it works for me. Okay, so maybe you have to consider not trading the day in day out. Okay, so if you are a scalper, okay, definitely you will not be able to move as fast as the algorithm. These days, the markets are dominated by algo. So if you can beat the algo, then you can trade the ultra short term. If not, then I think it will be safer for retail investors like you and me to trade from a little bit of a distance away. Okay, not to try to make every tick count. That is very, very stressful. Okay, so I won't do that. But for scalping, definitely A50 is a preferred instrument compared to the A50, the H50.
All right. Yes. So yeah, most of the retail investor we cannot fight with the robotic algo trader. So yeah, maybe swing trade is more suitable to for retail investor. Yeah, so perhaps we can go for another last questions for today. So yeah, another question here. Right now, the A50 index is showing a downside bias, 14,800 heading towards low 14,800. The China bear has yet to dissipate, especially the real estate property bubble burst has yet to settle satisfactory. So what's your view on China bear?
Okay, the China property market did not burst. Actually, the central government actually pricked the bubble many years ago. They saw the problem of over leverage in the property sector. So I think the central government actually deflated the bubble, resulting in the market not suddenly bursting. Okay, so it will take some time for the property sector to recover. Yes, a lot of Chinese wealth are tied to the property. So right now, the central government is trying to increase the income level, okay, and basically to encourage internal circulation. So over time, I think the property sector will not continue to be a main focus, okay. So yeah, it is still a problem, okay, but it is not as critical today compared to, let's say, 3, 4 years back when it was actually quite dangerous where it can just burst overnight. So I think the steps taken by the central government to slowly deflate the property bubble instead of allowing it to burst, and that is important. So we can see that there are stimulus package being that's going to be rolled out, okay, and this will be central to the equity markets going forward. Of course, China will not be able to operate in a vacuum. A lot of things will happen, will have to be based on what really happens elsewhere, especially as far as US is concerned. Do you believe that the Wall Street bull market run is over? If you believe that it's over, then you expect at least, if not a reversal, at least a temporary pullback. And if the US equity market experience a pullback, it will inevitably spill over to the other markets, including China's equity markets. So yes, it will have its up and down, but by and large, okay, I am still very positive about equity markets, even though we see Wall Street having major bull market run. Okay, so yes, near term there could be a risk of a correction. Okay, I don't see the bull market being over. Okay, so that will also maybe translate to other regional markets, including the Chinese market. Okay, so if you compare last year, 2025, China equity market actually performed a lot better than the American listed companies. So Chinese stock actually does a bit better compared to US equity market last year. Well, will that be the case going into 2026, going into this year itself? Again, it's an open question. There's a lot of moving parts here.
All right. So thank you for the answer. And I think we almost come to the end of today's sessions. And I actually saw some interest regarding on how to open an account with us and start trading in A50 futures. So before we really end for today's sessions, okay, thanks, Mr. Daniel, for the sessions and the Q&A. So, but let me share the our online account opening codes here. Yeah, so I saw some interest here. So if you're interested, you can just scan the codes on my slides. So it will lead you to the account opening. All right. So here, one moment. Let me share it. Okay. Just give me one. All right, so here's the online account opening code that you can scan on the slides. So if you're interested in stock, in CFD, or even futures trading to trade your first A50, yeah, you can just scan the code here. And after you complete the registrations and applications, our team will contact and assist you for further login and how to get familiar with the platform and start your trading here. Yeah, so maybe you can take a screenshots here. Okay, so if you're interested to explore more our investment service and you are up to date with our latest market views, market updates, or even promotion campaign, you can stay connected with us through social media. Now we available our channel and page in Facebook, YouTube, Telegram, LinkedIn, and also Instagram. So all these things will be updating daily or weekly basis for market updates, for promotion campaign. So stay connected with us and subscribe our channel, our page, so you don't miss out any info from us. Okay, so here's a QR code for you to join for our Telegram. So currently we have two separate Telegram channel from by Philip Capital. One is for stock trading. So if you're an investor that you are more interested in stock investment, so we're providing updates and market recap on latest market movement and also the news release for companies in focus. And if you are an investor or traders more interested in futures trading, so you can scan the code below down there for market views for major indexes, commodities, and currency. So, and also latest updates on market fundamentals will be provided as well in the Telegram channel.
Now, before you guys go, I want to also, because we are only 1 week away from the Chinese New Year, I want to wish you guys a fantastic Lunar New Year and 恭喜发财.
Yes, for sure. Yeah. Thanks, Daniel. Yeah, so we are just 1 week away from, I think less than 1 week away from our Chinese New Year. So yeah, wishing all the best and all the best. Stay healthy in this Chinese New Year. So yeah. Okay, so for the last, if you are interested to explore our service, so here's all the contact details for all the branches that we available in Malaysia. So we have total 11 branches. So yeah, if you are living in certain states or particular locations, so just feel free to reach out to our staff for your nearest branch so we can assist you for your investment journey. All right. So yeah, we're coming to the end of today's session. So let me thank again Mr. Daniel Ang for today's sharing. So hopefully all the sessions today will be helpful for you. So especially for those you're interested in investing in China stock, or you're already monitoring China market for been a while already. So hopefully all the today sessions will be a very good educational webinars for you all. So thanks for having time here. Yeah, so we'll see you on our next event. So thank you so much and bye-bye. If you have any questions or if you have any inquiries, just feel free to contact our number. I will show here, and or drop an email to us so we can assist you and immediately and with a very direct approach. All right. So thank you all. Bye.